thanks for joining us. Thanks for having us here. We're looking forward to a good week here at ADIPEC. A few introductions. I just wanted to introduce myself. My name is Witland LeBlanc. I serve as the Chief Financial Officer at Varel. I'm based out of the corporate office out of Houston. With me is Jordan. Jordan, you want to introduce
I'm Jordan
yourself?
Stringer. I'm the Chief Operating Officer for Varel Solutions. I'm based here out of the Middle East, so I'm based in the UAE, and I pretty much run the operational basis from the Middle East.
Yeah, no, great question. And basically, we did the Nordic Bond for a couple of different reasons. Number one, when we looked at our liquidity, while we had decent liquidity, we really wanted to get liquidity runway. A lot of our debt was short-term debt, so we went out to the markets in order to get more of a longer-term debt. So we went from a one-year kind of maturity to a 4-year maturity, which gave us a lot of flexibility from that perspective. The other reason we went to the market was really to get the Varel name out. We wanted to tap the publicly held debt arena so that investors could get to know us, as well as debt and banks from that perspective. And I think it was a very successful launch from us. For our perspective, we worked with 2 different book runners, our first time to market for us. And what we heard based upon that was we had a 90+% conversion ratio. So I think the street heard our story. They really liked our story based upon our past and what we could do in the market. So from a strategic standpoint, opposite of those is we really wanted to get additional working capital to really fuel and fund our organic growth. We knew the market was there. We needed an additional working capital cash in order to go get that market and seize the opportunities that were due to us. The last piece of that obviously is because of the tap version, and by going into that publicly debt, we were able to then think about inorganic growth. So we do have a few what we call normal pipeline discussions as it relates to the ability to grow externally as well. But that was the main reasons why we went through the public debt. Yeah, so I can't talk about Q3 yet. Obviously, the quarter is ended. We will probably release in the next couple of weeks, so people will be able to see that. But if we look back to the second quarter, as well as the first half of the year, really good returns from that perspective. When we look at our EBITDA, or our adjusted EBITDA, we brought in about 22.5 million, probably 22.4 to be exact, of EBITDA for the first 6 months of the year, compared to the same period of the prior year of about 5.8. So we had a good 228% increase when you start thinking year over year. And getting back to that discussion around the debt and the working capital, that's really been able to allow us to grow, as well as some customer intimacy issues. And not issues, but opportunities as we grow that customer intimacy. When we start thinking about not only the results, but top line, for the first half of 2024, we generated north of 50 million. In the second quarter, we generated north of 50 million from a revenue perspective, which was again an 11% increase over plan. So you can see that our financials are getting stronger and stronger as we capture that market and go out to market to continue to grow. You want to take a little bit of that one, Jordan?
Look, Middle East is extremely important to us. We've had over the last couple of years, we've had a lot of heavy investment here in the Middle East, and that comes in twofold. One is bringing people closer to the customer, and the second portion of that is understanding our customers' challenges. So a large focus, particularly here in the UAE with ADNOC, trying to grow ICV, so in-country value. That has also percolated out to the GCC, so places like Saudi, Qatar, Oman, Kuwait. GCC is very much a focus of our business, operates at about 40% of our total business when we look at a top line revenue perspective. And the big thing is creating that sustainable business model. We can sit here all day and talk about in-country value, but it's about creating a sustainable future for localizing our operations within the Middle East. And that is driving people, that is driving training, that is driving products, that is driving development. And so with these kind of injections of capital that we've had, we've really allowed to accelerate that and really transition ourselves of being quite sporadic internationally, but very much focused about what is our plan for the next 3 to 5 to 7 years, which is very much focused in and around the Middle East and growing that local sort of localization that we have here. We've always got lots of things in the pipeline that we're focused on and what we want to drive. I think when we look at projects, there's 2 types of projects. The projects that we want to get closer, better at is customer intimacy, right? We have to be able to deliver a product on time with service quality and at cost efficiencies. And that is very much what we're driving today. And understanding the kind of full value chain that we're trying to drive around customer intimacy. What are the objectives? What are the challenges? How do we mitigate them? How do we drive down MPT? How do we reduce invisible lost time? How do we become safer and better for our clients within the well construction space? So I think that's kind of an internal project to work on. And then long-term projects as we start to sort of spread out further as well. You know, we operate offshore, we operate in land, we operate in deep gas, we operate in large oil, hydrocarbon fields. I think you've got to look at it as wells are getting deeper, wells are getting more challenging, wells are getting hotter, and you've got to really drive on your R&D side of that. You've got to drive on your internal development of your employees, but you've also got to make sure that you're a trusted partner with your customer and you're able to drive that. So we have plays in both offshore Gulf of Mexico, Latin America, the Middle East, and Asia, and the North Sea. So really making sure we're focused on who we want to be and playing the markets that are particularly strong and we add value to our clients.
Yeah, no, absolutely. And it gets back to what Jordan just said, right? About how do we attack the market? What do we do internally? What we did was really look at how we were structured. And it wasn't that we were fat or anything like that. It was really about how do we attack that market and how do we get it all under one, what I would call accountability. So what we did was actually promoted Jordan to Chief Operating Officer. And underneath Jordan is really when you start thinking about the whole S&OP process, right? Really having that one accountability so that we're all aligned, one from a sales perspective, engineering perspective, supply chain perspective, and then ultimate delivery, right? So you start looking at that, and now that that's all under one umbrella, we can start thinking about what is the demand? How do we forecast the demand? How do we take that forecasted demand into the supply chain so that we can get the right product at the right price in order to build our product to deliver it on time? And that's how we're going to really penetrate it. I think the second part of that reorganization was we brought an existing employee, Jamie Sparing, and promoted him up to Chief Commercial Officer. And it really gets back to that customer intimacy that Jordan and I are talking about, right? How do we start thinking about what do our clients actually need? Not that we're just producing something, having it on the shelf and ready to get delivered, but starting to think about how we become more of a solution person to our customers as well. Maybe we don't provide all the exact solutions they need. Maybe they need a little bit of a tweak. That's where the R&D comes from. And how do we keep penetrating that? So those two moves I'm really excited about, the company's really excited about, because that's going to allow us to really put it all together and truly focus on our top customers.
And I think one more point to add to that, it's a very dynamic sector we sit in today, right? I think we're all quite understanding that it's a balanced ecosystem, it's a balanced energy system that we're run with. And I think the changes that we made has really allowed us to work a lot end of the front end around materials, where do materials come from, where do we strategically position our manufacturing plants, what projects do we engage in, where is the market going? So there's that front end engagement around R&D and supply chain. Then there's the next portion around understanding our clients' well objectives. And that comes through application engineering and really defining technical solutions. Then there's that kind of front face that we all see today, which is that kind of allowing the product to flow, allowing those technical conversations, allowing those solutions to be driven up. And then there's the whole 360 that we flow back through it, is taking those lessons learned, feeding it back into the supply chain, on the R&D projects. Where do we want to invest our people? Where do we want to invest our resources? So we make sure we're continually getting better, right? Again, the market we sit in is so dynamic today. We have to make sure that we're always driving return for our customers, return for our shareholders, and return for our employees, while making sure that everybody stays safe. I'll take the first one. I think we all sit today in a world of, we don't have a crystal ball, right? And if we did, probably none of us would be sat here today. I think the point that sits around, what is the market going to do? How is the market reacting? Trends, movements, cycles. I think the sector that we sit in the oil and gas sector today, a small part of the energy sector is, I think we've all been quite resilient of movements in the market, and I think we're all being far more mature about what needs to happen. And I think that goes back to some of the points we said before, is making sure we mitigate lost time, making sure we drive cost efficiency, making sure we remove any failure points, making sure we keep people safe. So as long as we continue to add value back to our clients and that they see as part of their value chain, that is what we'll continue to work towards, because they're up against the same obstacles as we are. Whether that's cost efficiency, whether that's moving people out the red zone, whether that's making sure that products go faster, hotter, cheaper, quicker, whatever that may be, we need to be listening to each other, because we need them and they need us. And that's the challenges that we always work towards.
Jordan, I would agree with that. And I think, it also gets to a little bit of your question of what they are seeing as risk and those kind of things. One of the things that we're trying to make sure is that we are reducing our lead time in order to service our customer, right? Because in that dynamic market that we have today, sometimes they need something right away, or there's a very short fuse as to when they need it. So as Jordan's talking about, as we look to that whole supply chain, how do we shorten that, right? Not only from getting the raw materials in, but also from making sure that any engineering design changes that need to be made or happen on the fly very quick, but as well as staying safe and keeping product, what I would call, just good product, and making sure it gets in their hands as fast as it can from that perspective.
Well, for me, it's the biggest and the best oil show in the world, right? I think when you look at the last 10 years, ADIPEC has continued to grow where other areas have probably struggled to maintain foot traffic. I think also as well from a company from us this is where we put a lot of our time and attention throughout the year, and we're looking at 2 or 3 years in the line, because you've got, it's a great place to have good customer conversations. It's a great place to meet our vendors. It's a great place to meet old colleagues. I think that there's a real buzz. You leave ADIPEC every year with just such this kind of positive drive for success, and I think everybody's on that kind of shared faith. And I think that's really helped with things like COP in previous years, ADIPEC behind, understanding, and then the messaging that comes out from the leaders out there, whether that's Schlumberger, Baker, whether that's Aramco, whether that's ADNOC. I think it's also the greatest minds are here, and I think it drives a lot of those really good conversations. So I always enjoy it. I've been coming here for years, and I'll continue to come. It's been a pleasure.
So I get the flip side, right? This is my first time at ADIPEC. I'm looking forward to it. I have attended other conferences, as Jordan would say, since I'm based out of Houston. I've been to OTC a lot. I see the buzz here compared to OTC, and it's just electric. And so I'm looking forward to a lot of the things that Jordan are, but really meeting some customers, explaining to them what we're doing different, right? How we're going to satisfy their needs, and really building those relationships across the world. But the buzz here is electric, and I can't wait to start, commingling and really meeting people this week.